Assalamualaikum warahmatullahi wabarakatuh. My name is Suraya Adnin Binti Mutalib and my matric number is 1190856. This video will cover the overview of the Islamic financial planning, steps in the Islamic financial planning plan preparation, cash flow statement, and budgeting process. So, what is Islamic financial planning? Islamic financial planning goes a step further by establishing a strategy for accomplishing specific financial goals within Sharia guidelines, so guaranteeing their success in this world and the hereafter. After understanding the meaning of the Islamic financial planning, you need to know the 6 steps in the Islamic financial planning plan preparation. First, cash flow and liability management planning. Second, risk management and takaful planning. Third, tax and zakat planning. Fourth, Islamic investment planning. Fifth, Islamic retirement planning. And sixth, Islamic estate planning. For your information, I will not explain further all the 6 steps of the Islamic financial planning plan preparation. In this video, I will only explain further the number 1 steps, which is cash flow and liability management planning. So, what is cash flow? Cash flow provides a report on actual inflow and outflow of cash for a given time of period. In Islamic financial planning, we only include cash transaction that only in Sharia compliant asset or financing. If there is any cash asset or financing activity that are Sharia non-compliant, they have to be disposed or refinancing. Cash inflows include all cash income such as wages, bonus, rental income, employees' contribution to the retirement account, saving, and investment. While cash outflows include all cash payments such as financing installment, grocery expenses, personal expenses, saving, or Islamic investment expenses. After listing all the inflows and outflows, net cash flow can be computed by subtracting total cash outflow from total cash inflow over a specific time period. There are only 2 possible net cash flow positions, which are surplus net cash flows and deficit net cash flows. For surplus net cash flows or positive indicates that the cash inflows exceed the cash outflows. This will allow us to pay off debt faster and accumulate more saving and investment. Vice versa for deficit net cash flows or negative. It demonstrates that our cash outflows exceed the cash inflows. In this case, we must either withdraw our savings or boost our credit spending. As a result, our liabilities will grow. Consequently, we must take action to avoid deficit net cash flows. There are 4 options available, which are: first, reduce your consumption; second, increase your saving; third, increase your investment account; fourth, supplement your money by working part-time or working extra hours. Okay, here I share the example of the cash flow statement so that you can understand further how to do a cash flow statement. And here comes the budgeting. Budgeting is one method of managing the cash flow. These are the 7 steps of the budgeting process. Firstly, you must set financial goals. Second, you must estimate your income. Third, you must budget for emergency fund and saving. Fourth, budget fixed expenses. 5, budget variable expenses. 6, record spending amounts. And lastly, review spending and saving patterns. As a summary for this video, Islamic financial planning is a method of managing wealth with the goal of success in this world and hereafter. With all the measures outlined above, Muslims can manage and preserve their wealth in accordance with Maqasid Sharia. That's all from me. I hope this video will assist you in correctly managing your financial planning in accordance with Sharia principles.